China, though, is front and center. Financial regulators, Alex, in China issuing a broad set of instructions to Evergrande overnight, telling the embattled developer to avoid a near-term default on its bonds. Let's talk about this. Damian Sassower, Chief EM Credit Strategist at Bloomberg Intelligence, has been covering this story from the get-go. Damian, they're telling them not to default, but they seem to be preparing for that. Is Evergrande about to be made an example of?
Well, Guy, we've come a long way in just 24 hours. I mean, into the Fed meeting yesterday, there was news that, Beijing was going to step in, restructure the company along the lines of what we've seen in the past with H&A, breaking it into 3 separate entities, protecting the interests of the wealth management product holders and whatnot. And, of course, today that's been blown up and set aside. And I'm in conversations with people who own those 8.25 March 22 dollar bonds issued by Evergrande. That coupon income is due today. They have not yet received it. That's $84 million that creditors are waiting for. Now, granted, if they don't pay it, we're subject to a 30-day grace period before the company goes into technical default. But all indications point to the fact that that payment will not be made, despite what Beijing is pushing the company to do here.
Hey, Damian, quick follow on that. What is the effect in terms of the bond market within China, the knock-on effect?
Yeah, no, we are seeing losses across the board here. I was just running those numbers, actually. I hadn't finished before the hit. But, the reality is it is right across the screen, and not just over the last few days, but over the last month. And so, yeah, we are seeing contagion spill over into the broader China dollar bond complex. For me, this is going to be whether or not we see it hit the real economy, and all indications point to the fact that it will. We do see, new home sales down. We see secondary home prices dropping. We see, retail sales growth, obviously. And we see China sort of trying to rise to the occasion here in terms of injecting capital into the system. We saw $17 billion pumped into the system by the PBOC this morning, but it's a far cry from what is needed to really stem the bleeding. In fact, I just saw news that China is not paying some employees internally, and certainly suppliers are waiting for their payments as well. So things are getting a little bit worse on the ground.